Good afternoon, traders. It's the S&P 500 futures chart review for 6/17/2019, and looking here at the weekly. So I had a comment this morning on my prep video that said I had the most complex BS chart on YouTube. So I'm guessing that the person's never seen volume profile, but I figured I'd better go over it just in case. So this is called a volume profile here. This is just showing volume traded at price. So in this particular profile that we're looking at, the most volume has been traded at 28.84. That's this big spike right here. What we do is do profiling. So if I grab this and I drag it all the way across, we're basically looking at all the bars that are included from here to here on the chart, and we're looking at the volume that's traded. So that's volume profile. I hope it's not any more complicated than that. We're just looking at the levels of volume at price. And the reason that we look at volume at price is to see where the institutions and the algos are trading with each other. The areas that they're fighting over, these are likely to be places where price is going to turn. So hopefully that makes it a little bit easier. The reason we use the volume profile is we can look at something like this big weekly bar right here and see, what levels we can expect maybe market turns to happen at, and how fast we can move through a level or area, because there's no volume there. There's nobody with positions in that particular area. So weekly chart right here. We've got a doji started. We're a little bit up on the up bar. We had a sideways day. I had mentioned that in the prep video that it was probably going to be a sideways day till Wednesday with the FOMC. Everybody's just kind of waiting. So on the daily chart right here, you can see I'm not profiling this last day. We had this 28.92 level right here that I kind of called out this morning. That was the low, and I will show you that on the intraday. So very tight range day. We traded right up, basically right into this little tiny node. There's just not a whole lot of action happening, and they traded away, and that happened pretty early in the day. So not much on the daily chart. The red line up here was the top of the range for the ATR, and the red line down here at the bottom was the bottom range, and I'm just basically using this Fibonacci tool to set the range on each side. So hopefully not too complicated there. There's a volume profile back here. We're basically chopping around in the volume profile and building up more volume. If I pull this over a little bit, now include these days, you can see that we added a bunch of volume right here at the top of the bar, and we're currently right under it and trading away from it. So most of the trading happened right here at this 28.98 level on the chart, and we're underneath it right now. So it kind of seems that the bears kind of won a little bit today. 240 minute, again, looking at the same thing, we can just see that 28.98. You see the big volume node across this particular number of bars that we've got right here. We traded down in this 28.92. You can see the little volume node that was right here, and that's where it bounced, and it kind of matched up yesterday, or the Thursday with that candle right there. So nothing too complicated. So this was probably the chart that the person was freaking out on, is my guess. I don't know. So because it was going to be what I thought was a sideways day, I basically profiled just the small range right here, and what I'm really doing is I'm just looking at particular pivot points in the market in order to get the levels and columns. So right here, when I pull this back, you can see pretty clearly, right, this 28.91.75, which was, right where it came down, hit the high volume, bounced away. So if you see the prep video, you'll see that I kind of called this level out. I didn't think it was super great. I thought there would be a little bit more pressure and that we would actually trade down here into this 28.88 level, because you see all the volume down here, and this would be the place to go long, but it didn't come down there. The red lines are just the point of control. They're just showing you where the highest level of volume. You can erase them, and it's just so that you kind of know across the chart when you run into it. So if this would have traded up, it would have ran into it and it would look like this. It would get cut off. And so nothing real complicated there. This is the point of control right here on this one. It's just going across. So it might look complicated. It's just showing you levels, drawing support and resistance levels on the profile. And the profile is just showing you the highest area of volume. And so you can see on this one back here where the highest volume we traded right here, right, and bounced away. And that's all we're doing. Try not to make it any more complicated than that. We're trading to the high volume areas and bouncing away. And if you go back and look at all the prep videos, that's pretty much how I call a lot of the levels. It's just a judgment call. And I call it the 60-40 rule. You have a 60% chance of it succeeding and going the direction you want it to go. You have 40% chance of it failing. It's just when you get down to the level right here and you trade in the right level, 60% chance that it's going to go, 40% chance it's going to fail. And that's because you just don't know what seller is going to show up here in order to take the other side of the trade. If the person with the most money, willing to put on the most risk, is going to win at this point, and you're hoping that you're trading with enough other people that you're going to bounce and go the other direction. It's an odds game. You're trying to improve the odds the best as you can, because all the professionals use volume profile, they use ladder charts, level 2s. They're looking at this same thing. We're just looking at it on a chart, drawing it with a profile. And that's why, we're making the trade there. We're taking that trade. And if we, pull this over, that was the high volume area right there. And so I took this trade this morning because 60-40 chance, right? I'm going to try and trade with the other people, and I took the trade, and it went for me, and that's what I'm doing, and that's what I'm trying to show you and teach you is these volume profiles tell you where other people are interested in trading, and the bigger the volume and the better the location, the better your odds. But hopefully all that makes sense. So here's the open of the market right here at 7:30 for me. This was the 92 area that we just looked at. If you look at this profile here, this is basically showing you all the volume on the chart from end to end. And that's all that this profile is. And as I move it, it's going to slightly change, right? As we go through it, it's going to change and move around. And so that right there is the entire day of volume. And if you look at this point of control, the highest amount of volume, if we look all the way across, that's where the market stopped at today. Right here into this point of control. There's a thing called a value area. It's 70% of all the volume. It's in the middle around the point of control. and these are outliers. This is like a bell curve, right? So thin, thick, thin, and when it gets out here on the edges or whatever, it tends to be the places where you get the reversals, and this is the 70% in here is considered the chop, and this is the reversal area. So hopefully you can go there's lots of other traders that do volume profile. Futures 71, he's always on Futures IO giving webinars and stuff like that. Peter, I can't think of Peter's last name. He has the level 2 program called Jigsaw. He's also, he'll talk about profiles and trading against profiles. Trader Dale, he's got a book and a course for profile trading. So there's quite a few people that are out there that do profile trading. So if we look at this right here, and this is just profiling, and we're just profiling that little range of volume right there. You can see, where did we trade up into? We traded up into the high volume node, rejected, went away. If we pull this down, down across here, and we profile over here, right? Where did it trade up to? Into high volume area right here, and rejected and went away. Same thing on the bottom. So here's one level, right? It goes right here. And so if I pull this up into a higher area and move it over so it doesn't have all that volume, right? This is the high volume area, rejected right here. It went away. So I mean, it just stair steps, right? So the price comes down, it beats this area, it comes back. Next time that it comes back down, it trades through just a little bit, and it goes to the next higher volume area, right? And then if I were to go and do this and remove all that and just get this little corner down here, we look at it right here, and we look across, and you'll see this little yellow line on every bar. This little yellow line on every bar, you can't really see it because I made the candles too big, but they'll start to stick out when they're smaller. That's the point of control in each bar. Each bar's got a point of control. That's the highest volume in the bar. I mark it off, and you'll see, like if I bring this back, I know it'll probably get hard to see, but here's the point of control right here. In this bar right here, lines up with that one, right? Here's the point of control in this red bar, comes across, it lines up right here with the point of control on that bar where it rejected. If I look up here, look at the point of control on that green bar right there, it lines up here with the top of this one. Where did this red candle trade up to? It traded right up into the point of control on this bar. Where did this red candle trade up into? Right up into the point of control of this bar. Where did this one trade down to? Point of control of this bar. Same thing. We're just always looking at volume, right? Because the volume's going to control where things launch from. This bar traded up into this little point of control and then reversed. It just plays over and over again. Here's the red bar, point of control in this bar, comes across, it's top of this bar, it's on this bar. They traded the same way. It was just 60-40, right? Here's one where the 41, the buyers end of day stronger than the sellers, and it went through. They still traded volume at that level, but it went through. You can see that somebody had two lines on each one of those, and here's a third one. Somebody was trading that level each time. It's hard to see because when I scrunch it up, you can see the yellow line, but I make it bigger, you can't see it. Yeah, I mean, they traded that level here, 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 and probably if we look across, they traded it on this green bar, they traded on that green bar, and it looks like they traded it on that green bar over there. So that's what we're doing. We're just basically profiling, and when we line up all these little yellow lines, look at the bar. This is the volume across, all the way across, and that's why you have that one. And if we look at this red one, yellow bar, yellow bar, yellow bar, yellow bar, yellow bar, yellow bar, 3 more yellow bars, another yellow bar, another yellow bar. You get the point. We're just looking at volume. Hopefully it's not any more complicated than that. We're doing profiles of the pivot points, and man, I hope it's not the most complicated BS chart on YouTube. So you can see we traded down there. Sellers were trying to push it through. They knew the area. There's a yellow bar right there. They saved it, and it went back up. So 60-40. The volume profile, right? So I draw these blue lines. These are scalping lines in the morning before the market even trades. I draw these blue lines on the chart here that's on the intraday, and look how I can predict the market. I gave these blue lines out, and look at how I can predict the market just by looking at the volume and drawing these blue lines off of the volume profile based on the past. So if I pull over here and remove today, right? I'm going to remove today. Look at this volume right here. Look at this volume right here. Put that line on, put that line on. Guaranteed that if we had a little bit more volume over to the side on a bigger chart, there's a volume level right there. And then we'll pull this back over. Right? And look how we're trading around this line. So support and resistance to me is trading on both sides, right? So we bounce off of it, we go through it, they fight, they put it back up, they get below it, they're fighting on this side, they get below, they bounce off of it. And so on my scalping levels, basically what I'm doing here is I'm expecting some kind of, when it's a fresh level, I put that in the prep video, when it's a fresh level, I'm expecting a reaction when they hit this line. I think you can take a point out of the market when it hits the line the first time, when it's fresh. So you're coming down, it's fresh. You hit it, you bounce. Price is $28.92. It trades up to $28.94 right there. You could have took two points out of it off the first little touch right there. Boom, easy scalp. This is the 92 level, which I called, and you got this big run if you took it all the way up to the top. But just for a scalp, look, it comes back to this level right here, touches it. This is 96.50, and it comes all the way down to 95. You take a point out of the market just like that, and it actually runs back to the other side. So fresh levels, right? Here it comes back, came up and around, kind of fresh. I don't know if I would have took it just because of this little bounce. So if it bounces in front of it, like this right here, see how this one bounced right in front of my line? You got this big old reaction right here. I won't take it. At that point, I'm done. I kind of consider it that my line's off by a little bit or something like that because it reacts right in front of it. I won't take it at that point. This one didn't work right here. I actually tried to take this one. I did escape out of the market without a loss, but it did push through. It's one of those 40-60s where I lost, but it came back. None of those were fresh levels after that point. And here's one. You take a point of heat, 29.01. to 2902. You take a point of heat, but you do get your point out of here, 28.9950. So, and if you sat in it and you rode it all the way back, you rode it back to the line. Again, you get the bounce. This is fresh. There's nothing's been here for a while. This is fresh. You get the bounce. You don't take it again when it comes back, even though it does bounce. You would have got a point out of it. It passes through, gets down here to this line. You would have got your point out of it right there. These blue lines are drawn before the market, and look at how they work. And it's just based off of a volume profile. If you have questions, please leave them in the comments. If the chart looks complicated to you, let me know. Trying to help you guys, trying to help you understand how this volume profile stuff works and how well it works. If you're a day trader and you're a scalper, you know, I think my blue lines that I give out every morning work really well. With this is just 100% range extensions. You could think of this as a 100% on the Fibonacci or something like that. You know, it's 100%, 200%. You could think of it as a Fibonacci range extension if you wanted to, but it's just the range. I take a swing, and then I expect that level when it breaks out to go 100%. So, and that's what you get. You know, here's from the bottom, here's to the top. Usually on the first touch you'll get a rejection or something, but this one passes through, goes up to the top, finds the level, rejects. Again, tries to trade all the way up, 100% range extension out. There it comes back, hits this level, bounces off of it. It's bouncing, breaks underneath, finally gets down here. Again, trades off across the thing, trades off, comes back, bounces, goes back up to the line. And they play across all the way. You know, the levels are just, it's symmetry for some reason. You know, it just plays over and over again. It's support and resistance. But when the ranges break out, they tend to go to the 100% range extreme on the other side. And that's just how I play it. And it's just nothing but a Fibonacci tool with a 50%, and I'm just expanding the range out. So if you guys like the analysis, please subscribe to the channel. Please help the channel. If you have comments, questions, please leave them in the comment section. More than happy to help anybody, answer any questions that you guys have. And just to show you guys, I didn't show you guys earlier, but here's my performance report for today. So it was kind of a tough day for me, 400. I took 62 loss, made 15 trades, 86% win rate. I had consecutive winners. I only did 6 in a row. And I don't know what else to say here, but just to show you guys how I did in this. It was a tough trading day. It was a tight range. Not sure what else to say at that point, but okay, guys. Well, I hope you guys did better than I did today, and I will see you in the morning for the prep video. Take care.